everyone, and welcome to your Daily 5. I am your host, Mish Schneider. We have a lot to cover today, so let's get going. What I thought we would focus on after several weeks of covering different sectors from international ETFs to high growth, small cap stocks, etc., and seeing a really good run in the market ever since we saw the lows in the March, was really what I like to call back to basics. And back to basics is the economic modern family, really of my own creation, using one index, the Russell 2000, and 5 different sectors: brick and mortar retail, transportation, regional banks, semiconductors, and biotech. And the reason why I want to focus on them for you all now is because they have all rallied into pretty good resistance, although there's been some rotation and some of them are at different chart points than others. However, overall, this is going to be a very pivotal week in that will we continue to stretch this market as far as it can go, given the stimulus, or are we going to start to see some of this wall of resistance showing sellers coming into the market, in which case time for you to be taking profits and certainly not establishing new longs, not at least in these particular sectors. Now, what I would like to start here is with a little design. These are the characters of the modern family. I worked with a cartoonist to put this picture together, and this very much describes what we see going on here. Money has been falling from the trees. This has been a really good time to trade, although certain sectors have done well, better than others. So this is our grandpa Russell right here, IWM. This is Granny Retail, XRT. This is Transportation, IYT. This is Big Brother Biotechnology, IBB. This is Regional Banks, KRE. And here's our superstar, Sister Semiconductors, SMH. So let's go to the charts now. We're going to start with IWM. Now, IWM has been, to me, a really good way to gauge the strength of a market. And when everything was making new highs in the beginning of 2020, you can see that this actually did not really do as well. And so I wouldn't say it didn't do as well, but it certainly sold off faster than the SPY and the NASDAQ did. We had this first little correction even before we started to see the big crash. And right before the crash, NASDAQ had made new highs while this didn't. So that was a clue. And I often go to this particular index for clues because this is 2,000 stocks within the United States. So now what we can see here is that impressive move up. And right now, we're coming really into the resistance here at the 200-day moving average at 146.58. So essentially, my take on just pure price alone is this. If we can get up here, even maybe consolidate and power through, then there's no reason to think that this cannot go up even higher, maybe to 155 up to 160. But on the flip side, that I would be equally prepared for is that this resistance turns out to be palpable. We start to roll over, and if we break down under 140 and eventually the 10-day moving average, which is the cyan line here, I would start to use some caution. Looking at the price performance, it is definitely outperforming the SPY here, but coming into some resistance there. And looking at the momentum indicators, it's taking out the 200-day moving average, which is good, but it has not gotten through that zero line, and it hasn't been through that zero line since the middle of February. Now, if we move up here to XRT, brick and mortar retail, has been killing it. So whereas the IWM I just showed you was not over the 200-day, brick and mortar retail is, which is kind of bizarre considering from a fundamental standpoint, there has not only been a lot of bankruptcies in brick and mortar retail, but we're having a little trouble reopening. And of course, with the current looting situation, that also is affecting some of the chain stores like Target, for example. But nonetheless, pure price, we actually had a little bit of a runaway gap here today over this recent consolidation over the 200. So really what you want to see now is for this 41 level to hold. You don't want to see a gap filled. Generally, that's not a good sign. And of course, here at 4040 is your not only 200-day moving average, but you can see that the 10 is crossing. Otherwise, if we continue to hold the gap, with a low of about 42.50. If that level holds, then we're going to start trying for a move closer up to 44.50. And again, this too never really outperformed the rest of the sectors, or in the semiconductors and the NASDAQ and the tech stocks has been weak for quite some time. So in some ways, this is really healthy and forward-looking that people are going to come out of this and start spending money. We shall see. On the price, it's well outperforming the S&P 500, and on momentum you can see it's crossed that zero line. So right now XRT has been a good place. If we move on here to transportation, this is not showing anywhere near the strength of what we're seeing in IWM or XRT, and this to me would be a caution right here. Transportation is the demand side, so where IWM may be the supply side, this really shows you the lack of demand that we're still seeing as we're trying to reopen after the pandemic. And so we need to see this continue showing signs of strength, which means at this point now it really should hold up. Again, you see a little bit of a gap here, not much, not like XRT, but you really want to see this hold around 164 level, 164. And then you want to see this go up another $10 or really $8 from here up to the 200-day moving average. What you don't want to see is this to break down under 164 and eventually break down under this 10-day moving average here and test some of the more recent support levels down closer to 150. That would not be good for the whole market. This, by the way, is showing also an outperformance on the SPY and hitting right here, which makes sense on this small gap today, into the resistance on the momentum. So it either goes up more from here, consolidates and goes up from here, or we're going to see, along with what I just showed you with the others, a little bit of a sell-off here, and how far and deep that is remains to be seen, of course. Now this is regional banks. Regional banks has really been the lagger of all of this. Now when I'm showing you this, it's trading right around 40.60, so a little bit higher than you see here. But again, look how far we are from the 200-day moving average on this one. However, we are seeing some kind of a nice bottoming pattern here. So a close over 40 could get this going. Now, this is reacting to a couple of things. One is oil has definitely firmed up, and this is related to oil. Two is the yields have actually risen, and so it's interest rate sensitive, and that's been a boon to this. People are saving more, which is also a good thing. But nonetheless, that could be all temporary unless this can continue to hold 40 and make its way up closer to 47. And of course, on the flip side, if it really breaks down, I'm saying 35, which would be kind of right underneath all of this. That to me would be a big warning. This gave us the first warning that the market was not going to be continuing to go up and was looking at a failure back here at the end of February, early March. It never even went up to its December 2019 highs. Next here we have semiconductors. Okay, so Sister Semiconductors has been really strong. This here right now, what we're seeing is a huge move and another kind of gap here, right up here. You can see the gap today. And so again, we had to fill the gap here from when we crashed on this time. We made a big gap down and never looked back. We've now filled that gap and we're back above it. This to me is still one of the best looking sectors that we can see here. It's outperforming, its momentum cleared the 200. And so really what we want to see now is this hold at around the 142 level and see if we can make this way up to 150, 160. So if the market holds up and all the other sectors hold up, certainly you still have opportunity in semiconductors, but remember, you always want to check your risk reward. And then we have IBB, which is biotechnology, which has been one of the more perplexing sectors of the modern family. This looked like it was going to absolutely explode. It needed to get over 136. It hasn't, but yet on the other hand, it just looks like one giant range of consolidation. And so really what you want to see now is this hold up at 130, clear 136. And I think this might be some of your best opportunity to go long, is to look at some of the biotech stocks that are sitting near 52-week highs and consolidating, or even the instrument itself is certainly underperforming the SPY, and you can see the momentum is starting to wane. So keep your eye here. So that's it for now. Hope you're having a good trading week. Thanks so much for watching, and bye for now.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.